and welcome to CryptoBytes, the podcast where we find today's news and information in the crypto space and break it down into bite-sized chunks. I'm your host, Rick.
And this is Rob. Guys, hit the like, subscribe, ring the bell for the notifications when we go live. Also, I don't know if you've seen the price of Bitcoin recently, but it's a very good time to start DCAing in. And what better way to DCA than to use the link above, swanbitcoin.com/AGC. Get $10 of free Bitcoin after signing up and start stacking. Wow. So let's not bury the headline here. Peak crypto winter. Gosh, man, the event for
Peak.
the
No. Let's back up here. Let's not say peak. It can go lower, or it can go higher. I don't know. However you want to see it.
some people, just look at it inversely, right? But look, the events over the past couple of days, we said it here numerous times, not your keys, not your Bitcoin. Take your coins off the exchanges. And for those people who have been saying this mantra, but not following what they're saying, shame on you. All right? Shame on you. Celsius has halted withdrawals, probably one of the biggest DeFi platforms there is.
Right. Celsius
Or at least
halts withdrawals.
Right. So with the downturn in the crypto market, with Bitcoin falling below 25,000, a lot of people are getting wrecked in the DeFi space, and Celsius isn't any different. Though they've been messing up numerous times, right? They lost a lot of Bitcoin during the Badger DAO hack. They also gave out Bitcoin as a mistake when they were trying to reward some of their users for like a monthly bonus program. So, and their CEO has been arrested for like sex trafficking. I mean, very reputable group of individuals, I think.
Very reputable.
Right. So with people getting wrecked in the DeFi space, Celsius has been providing a lot of liquidity to some of these DeFi platforms like Aave or Curve, and they've also staked a lot of ETH and staked ETH, and a lot of this stuff can't be withdrawn. And once it's there until ETH 2.0 comes live. So a lot of people are trying to withdraw from Celsius, and it is a bank run.
I mean, this kind of rhyme with what happened to a certain ecosystem backed by or built up by a stable coin. Something very similar that happened there.
Oh, Terra Luna.
Yeah.
This is exactly what happened.
A little bit of a rhyming thing going on here.
It's called contagion, right? It's like we talk about the Bitcoin domino effect. It's just the contagion effect. It's kind of the same thing. You tick off one domino and it just goes down the line, the next one, the next one, the next one. So yeah, we saw Terra Luna. Now we're seeing Celsius. Could Coinbase be next? I mean, they've added a lot of these. They participated in the altcoin casino, to put it nicely.
Ooh, Coinbase. You're throwing big names out there now. I mean, ladies and gentlemen, if you're watching this and you've bought crypto at all, I almost guarantee you know what Coinbase is. You probably use that to check the price of crypto. What happens if Coinbase tells you, oh, you know what? You can't buy any more of this. Oh, and you know what? We're suspending selling of your Bitcoin right now, or your ETH, or of your Dogecoin. I don't know. Pick your crypto, right?
Right. But we've highlighted Celsius before, how it was a kind of a dodgy lending platform. People take loans out on their Bitcoin, they borrow, they get leveraged tools to do risky trades with. There is a Twitter profile called Dirty Bubble Media. They've been highlighting Celsius and their movements of their wallets. So if you want to get a little bit more detailed information, I would say definitely check them out. Take a look at their Twitter feed, scroll down, read all the good insights, and they have a lot of good retweets, a lot of technical analysis as well. And the general consensus that I get from reading what they've been retweeting and what they've been saying is that Celsius is a Ponzi scheme. I think I generally agree with that. when when people borrow money and they put that money in risky trades to pay their to pay their depositors, and they take out advertisements to bring in more depositors, and the cycle continues. I mean, that's pretty much a Ponzi scheme there. They have to keep growing and growing and growing, and it works generally okay in a crypto bull market. But
So then what happens to entities like, if we talk about growing and growing and growing, stuff like crypto.com, whom has an arena and didn't isn't wasn't peak crypto just not too long ago? Like once we start getting in the what was it, Brad Pitt? No, not Brad Pitt. What was the some actor, some A-list actor? Matt
right,
Damon.
right. We, we,
Matt
we,
Damon.
we also spoke about this too, right? You have places like crypto.com, Fortune favors the brave, them taking out, putting their name on the so-called, well, the previously
What
named
yeah,
Staples
what
Center.
used to be the Staples Center.
Right, right. They had all this money, and now we're in a bear market. But I guess moving on in the same light, and we'll get back to crypto.com, but BlockFi yesterday, they announced that they're laying off 20% of their workforce.
That's BlockFi too. That's a big name.
That's another lending platform with their own crypto. So you deposit Bitcoin or Ethereum, you get some
Like the
token.
Crow.
You get some token that represents some sort of value, I guess, right? And then
Right.
you leave the stuff on the platform, and they lend it out again. Do they do risky loans, or do they do risky trades against your asset, and you expect some sort of reward for it, right? And when they start losing money, or when their trades start going south, they have to get riskier and riskier just to get that return back,
Well,
right?
what happens if me, Joe Smith here, wants to start redeeming all of these coins I've gotten from them, these tokens, if you will.
Right, right. And then that's called a bank run, right? You got to be the first one, and then everyone else wants to rush in to try to get their stake, and they'll probably start freezing withdrawals on their platform as well. But look, BlockFi isn't the only one. I mean, we kind of said this already, but Crypto.com, right? They spent a lot of money on advertisements. This is kind of like the theme here. All these platforms spending money on advertisement instead of you know having a cash reserve for the harsh winters. No, no, they they,
Mm-hmm.
they spend on an exuberance, right? Crypto.com, they're laying off about 5% of their workforce.
Oof, oof.
And I think today Coinbase is laying off another like 5 to 10% of their workforce as well.
You
So
know, it's going to be real interesting once Bitcoin, well, assuming that the crypto market recovers to the point where it was, let's say a couple months ago, and all of these jobs are going to start opening up again. Are you
right,
really going to want to work for one of these companies, though? Like,
right,
it's
exactly. So what does that tell you about this job security in the crypto market, right? Is it only good for 12 months in a bull run, and then what 1 2 years maybe in a crypto bear market, right? What that doesn't bring any confidence to
you know,
developers in the space, or even people working for some of these large platforms.
it's true, man. I can put it to you this way. I think a lot of these industry have been born because of the sudden rise in crypto over the past year. I'd say since mid 2020, all of 2021, this big craze that came out of here. Now you've got all these huge investment firms coming out putting real money behind it. But now that crypto is doing what crypto does and move in waves, right? We're starting to go down. It's starting to go lower and lower. Something tells me we're never going to see like 10K again, just because there's a lot of really big fish in this pool now. But it's happening. Companies are freaking out. They don't know what to do. This translates into like people getting laid off, money getting. I'm going to call it laundered for lack of a better word, but I feel like laundered is the right one here.
I like
Like
Tether. Yeah.
right, right.
Yeah. No, no, I think 10K is it could be a possibility with Bitcoin. It takes a big liquidation event for that to happen. People's been saying Michael Saylor's the canary in the coal mine. I mean, he's publicly said how much Bitcoin that he has at what price and what his liquidation price is. And I think on Monday, I think it was Watcher Guru, he was basically saying, updating every hour on the Michael Saylor's Bitcoin position and its loss, and I think it was up to $1 billion at one time. But Michael
Ouch.
Saylor, he stated that yes, he has a liquidation price, but he has even more collateral to put up if that ever happens. So is he bluffing? I don't know.
I
There's
see.
right. So could it get lower? I mean, it's a possibility. Do I want it to get lower? I mean, I'm greedy, right?
So anyway, selfishly, yes,
Right.
but
I
it's
would
so that
buy
I
at those
can
lower
back the dump truck
prices.
up, fill it
Right.
up a bit, and then hopefully watch it all skyrocket again.
Right, but this is why you DCA with
Yep.
swanbitcoin.com/AGC because you don't know. And time in the market beats timing the market. So so
And for those of you that go around, that's swanbitcoin.com. That's $10 of free Bitcoin.
yeah, so is this the back to the question of the day? Is this the peak of the crypto winter? We're seeing companies lay off their workforce. We've seen some of these DeFi platforms or these lending platforms halting or suspending, pausing, whatever you want to call it, trades.
Mm-hmm.
We just saw a crypto protocol just blow up, and that was the Luna UST. Or could it get worse? I mean, it's darkest before the light. I don't know if this is the worst we've.
Well, let's talk. Well, what does worse actually look like? And what does that mean for like your layman hodler, right? Worse realistically just means that these crypto prices are going to go down. Okay, and something tells me there's a magical number where it turns into a landslide where it just starts falling and falling and falling. And my guess is that number somewhere around 17.5 for Bitcoin. Pure speculation, right? But this just means that do we expect a mass exodus of people from crypto altogether and just like dusting their hands off and saying I'm done and hope that they got out at the right time, or are we going to see people like bearing the storm holding for the next huge spike?
I don't know. I guess it's we have to wait and see. Uh, but I don't think we've seen the worst of it yet. It doesn't seem like it's too bad if you're not in a leveraged position, right?
Now,
If
what does
if
this look at real bad?
it's looking
What
really
starts
bad.
shutting down? Exchanges, right? When these start to pause, when these start to hold, when you can no longer move your crypto, either buy or sell from the exchange, that's really when it gets bad. And you're in that position. Why? Not your keys, not your coin. Take your stuff off of the exchanges. Like you have to. Take your crypto off the exchanges.
Right, but this is also good for I guess, for the landscape in general, right? It takes out the bad positions, the bad, I guess, the leverage trades. It gets rid of these projects that don't do anything, right? Does this project need a chain for itself? Does it need a token? Right? It gets rid of all that crap assets, right? If you're a Bitcoin maximalist, you might see everything that's not Bitcoin is shit anyways.
Separate the wheat from the chaff.
Right, yeah, and there's tokens out there that have survived multiple, well, more than two, maybe two crypto winters, right? Ethereum is one of them, Cardano is one of them, Bitcoin is another one, right? They've survived multiple crypto winters, or if you say this is the second one for a lot of them. A lot of these coins now, this is their first crypto winter, so are they
Oh,
going to
you
come
mean the
out of
ones that were
this?
worth 30 cents and who are about to be worth 0.00003 cents? Oh
Right.
yeah.
Who knows? Maybe Doge might be the coin to roll them all. Who knows?
Let's not joke like that.
Right? Man, but you know what? I would say let's wrap it up here. Guys, thank you for tuning in. Hit the like, subscribe, ping the bell to get the notifications for when we go live. We're here, well, at least twice a week, either Monday, usually on Mondays for the CryptoBytes show, and Thursdays for NFTs with Keys.
With
Uh,
everyone's favorite person in the world, that's Keys.
right, producing the show today. Thank you, Keys. You can check him out on Twitter at NFTs with Keys, and you can follow us, me, Our Heroes Crypto on Twitter at Our Heroes Crypto. And once again,
You can also sign up for Rick Rickelson's OnlyFans. Let's go.
we are a Cardano stake pool operator, guys. So there's two ways. Well, I guess there's three ways to help us out. Like, subscribe, ping the bell. One way. The second way is to go to the link up top, swampbitcoin.com/AGC, sign up, start stacking, get $10 of free Bitcoin. And the third way is we are a Cardano stake pool operator. You can stake to our stake pool, ticker AGC. And the neat thing about Cardano is that you always are in possession of your coins. They never leave your wallet. There's no slash and bond. There's
Yep.
no leaving it up to the stake pool operator, to do what they want with it. It's always in your possession. It's always liquid as well. You can sell, trade, I don't know, transfer the coins at any time at any point. So, uh,
While
eh,
staking it with AGC.
right, while staking it. So, thank you very much. And with that, that's your crypto bite.